This video is not for traders who chase every move. It's not for people who feel anxious when the market moves without them. And it's definitely not for people who think success comes from being in every trade. But if you're tired of entering late, tired of emotional decisions, and tired of watching profits disappear because of impatience, you need to watch this video to the end. What FOMO really is: fear of missing out. Most traders think FOMO is just excitement. It's not. FOMO is fear. Fear of being left behind. Fear of missing opportunity. Fear of feeling stupid later. And in trading, fear is expensive. FOMO is one of the fastest account killers, yet one of the least understood problems in trading. In this video, we're going to break down what FOMO really is, why it controls so many traders, and how professionals eliminate it completely, not through motivation, but through structure and mindset. Section 1. Why FOMO exists in trading. FOMO exists because the human brain was never designed for markets. Your brain wants certainty, immediate reward, constant action. The market offers uncertainty, delayed reward, long periods of waiting. That mismatch creates tension. When price starts moving without you, your brain interprets it as danger. You feel pressure to act, not because it's logical, but because your brain hates being excluded. And the market knows this. And Section 2, how FOMO shows up without you noticing. FOMO doesn't always feel like panic. Sometimes it feels like logic. You tell yourself, it's already moving, but there's still room. If I wait, I'll miss the opportunity. This setup looks good enough. But deep down, the real reason is this. You're afraid of watching price move without you. That fear causes late entries, poor risk to reward, ignoring rules, overtrading. And once you break rules once, breaking them again becomes easier. Section 3, why FOMO never goes away by itself. Here's the truth most traders don't want to hear. FOMO does not disappear with experience alone. You can trade for years and still struggle with it. Why? Because FOMO is emotional, not technical. It's tied to self-worth, comparison, ego, the need to be right. Unless you address those things, new strategies will not save you. Section 4, the first strategy: accept missed trades. Professional traders miss trades all the time. The difference? They don't care, because they understand something most traders don't. Missing a trade costs nothing. Entering a bad trade costs capital. Once you accept that missed trades are normal, FOMO loses power. You stop trying to catch everything and start waiting for alignment. Section 5. Define exact entry conditions. FOMO thrives in vagueness. The moment your rules are unclear, emotion steps in. Professional traders don't ask, should I enter? They ask, does this meet my criteria? If the answer is no, there is no decision to make. Clarity removes temptation. Section 6. Limit how often you trade. FOMO feeds on constant screen time. The more you watch price move, the more pressure you feel. Professionals don't watch charts all day. They check specific times, specific sessions, specific conditions. Less exposure bores less emotional interference. If you've ever entered a trade you knew you shouldn't take, leave a comment that says, I've been there. Awareness is the first step to control. Section 7. Focus on process, not opportunity. FOMO comes from opportunity obsession. Professionals are process obsessed. They care about execution quality, rule adherence, risk consistency. They know opportunities are infinite, but capital is not. Once your focus shifts to process, missing trades no longer feels painful. Section 8. Pre-accept losses before entering. One reason traders rush entries is fear of loss. Ironically, that fear causes more losses. Professionals pre-accept loss. Before entering, they ask, if this fails, am I okay with the outcome? If not, they reduce risk or don't trade. Acceptance removes urgency. Section 9. Stop comparing yourself to others. FOMO thrives on comparison. Social media shows wins, profits, perfect entries. It rarely shows losses, drawdowns, missed trades. Comparing yourself to highlights will distort your judgment. Your only competition is your execution. Nothing else matters. Section 10. Build trust in your system. FOMO often means one thing. You don't fully trust your system yet. Trust comes from backtesting, journaling, consistent repetition. The more proof you have, the less you feel the need to chase. Confidence built on evidence is calm, not emotional. Section 11. Understand this truth. The market will always move without you. Every day, every week, every month. And that's okay. Your job is not to catch moves. Your job is to execute your edge. Once you accept this, FOMO stops controlling your behavior. A final message. Overcoming FOMO is not about discipline alone. It's about identity. When you stop seeing yourself as someone who needs to be in the market and start seeing yourself as someone who protects capital, everything changes. Patience becomes natural, waiting becomes comfortable, and decisions become clearer. That's when trading becomes professional. If this video helped you see trading differently, subscribe to Wisdom FX Insider. This channel is for traders who value discipline over excitement, process over emotion, and long-term success over quick wins. And if you watch this to the end, you're already ahead of most traders.